Are you thinking about buying a house this year and you're on the fence? Maybe this is your first time you're actually going through the process. I'm going to talk about a few things that you have to think about and know before you go through this process so you don't sabotage your chances of buying a home. Now, if this is the first time you're checking out my channel, make sure to hit that thumbs up and subscribe to the channel because I put out content every single week to help you navigate the real estate and mortgage world. I've been in the mortgage business over 15 years, and a lot of the stories and advice that I share with you are things that we go over with our clients every single day to help them be successful, not only with their first purchase, but with their investments going forward. And we're licensed across the country, so we can help you in nearly 47 states out there in the US. The first thing that you could be doing that could sabotage your chances of buying a home is just not saving money. I know this is a tough one to start off with because of inflation and where everything is going in the economy right now. A lot of people are getting laid off, and making ends meet is becoming tougher and tougher. However, you should still put a percentage aside every single check to make sure that you pay yourself first. This is one of the things that I've learned reading financial books, money books on how to build wealth. The first thing you have to do is pay yourself first. But so many times we make the mistake of paying our bills and everything else first. And then when we look at what's left over, that number doesn't get us excited enough to even start saving any money. So now the next paycheck comes, you do the same thing, and you still haven't put any money away on the side. So the first thing that you have to do is make sure that you pay yourself first, whether it's 5%, 10% of your check. Put some sort of money to the side because that will then start to accumulate over time. We're not going to get rich quick overnight, but if you start doing this in the course of the year, let's say you made $50,000 last year, $60,000. If you put 10% away, you might have been able to put away another $5,000 or $6,000 that you don't have today. So buying a home can be a process. However, if you start making some sacrifices today, you can get to that end goal so much faster than trying to wait until the last minute. Now, even with this savings account that you have, another tip that you could do is create an account that's not easily accessible. So if you need the money, you have to go drive to the bank to get the funds out or find ways that you just can't access the funds that easily. That way it doesn't exist. The money's to the side. You're not thinking about the fact that you have an extra $5,000 or $10,000 saved up. And also you want to look for high yield savings accounts. Some of these accounts are paying 3%, 4% these days. So again, every little bit counts. If you can start accumulating that cash quicker, again, the goal is to get you into your home and stop sabotaging yourself from becoming a homeowner. Number 2 is poor credit management. This is something that happens quite often, and especially right now, I'm seeing a lot of credit cards maxed out. You want to make sure that you can keep your credit card balances under 30% of your credit limit. So if you have a $1,000 credit limit on your credit card, you want to keep those balances under $300 when it comes time to close out that month statement. Remember, there's dates on your credit cards you have to be aware of. There's the period that closes the account every single month, and then you have your payment due date. So you want to make sure that you get that 30% balance under the date that closes the account every single month, because that is what gets reported to the credit bureaus. So if it's maxed out, even though you pay the card off, it's not going to reflect that accurately on your credit report. So make sure that you, one, get to really understand what's on your credit report right now. Are there any inaccuracies, whether it's old collections, maybe things that you've paid off in the past that are still showing up? Or sometimes I see family members utilizing other family members' credit. Make sure that you're familiar with all of this stuff. Clean it up because that's going to help you in the long run. And number 3, not getting pre-approved. This is something that we stress so much on this channel. Make sure you understand your finances, get qualified first, so that way when you go out shopping for your home, you're not guessing on how much house you could potentially qualify for and you're shooting in the dark. Getting pre-approved is probably the most important step in the entire home buying process, unless you're paying cash. If you're paying cash, props to you. You've got the money in the bank and you're good to go. But for most of us, we have to get a loan. So if you don't understand how much your buying power is, your realtor can't do their job for you. And if you're trying to guess and figure this out without talking to a lender, you're only doing yourself a disservice because you might be calculating wrong numbers and then making decisions based on inaccurate information. Getting pre-approved. I cannot stress how important getting pre-approved is. That actually should be number one on the list. But make sure that you talk to a lender. And if you need a second opinion, you can always reach out to myself and my team. My email is located in the description below. You can always reach out to us and we'd be happy to hop on a call and see what we can do to help you out. Number 4, failing to consider additional costs. This is something that comes along with all the emotions of buying a home. You get super excited and you're ready to move, but then you're not really thinking straight. So you want to make sure that you're taking into account all the other expenses that could potentially come up on the house. And this is why getting a home inspection is so important up front. You want somebody else to go through the house from top to bottom and tell you everything and anything that could potentially be going wrong with the property, from the roof to the plumbing, to the lights, to the electrical, if you have a pool, all of that stuff. You want to make sure that they go through all of those issues, because if there's something that comes up that maybe the naked eye can't catch, you want to make sure that you address that with the seller before closing on the house. That way you're not so excited that the house just looks amazing, but you just inherited someone else's problem that could cost you tens of thousands of dollars. Number 5, choosing the wrong loan. This is something, again, I stress quite a bit on my channel. So many times that when you're shopping for a lender, all you're caring about is who's got the lowest interest rate. But that doesn't always mean you're getting the right loan. Any loan officer can give you the lowest rate. They're just going to charge you more money for that. And that doesn't necessarily mean that that's the best deal for you. The public thinks that that's the best way to go about shopping for a rate. However, I'm trying to change that notion, because strategy and options are far more important than getting the lowest interest rate. So make sure that when you're talking to your loan officer, they are showing you several options on what it can take to buy a house. Getting a mortgage is not a one-size-fits-all. And just because your cousin, your friend, or family member bought a house a certain way, that doesn't necessarily mean that that's the way that you're going to buy a house. Whether it's how they negotiated a deal, or how much closing costs they got, or what type of loan that they ended up getting as well. Make sure that you are looking at your situation. It's okay to get advice and maybe some recommendations from other people, but your financial situation is going to be based upon you. And that's how you need to make that decision, or else you could be choosing a loan that your friend got that made more sense for him than it did for you. And again, it's going to cost you money in the long run. Number 6, lack of long-term planning. This is something, again, that goes back to being emotional about buying a house. And I get it. You get super excited. Your family's moving in. You're thinking about all the holiday parties you can have at your house. And you're not asking yourself, how long do I plan on staying here? And this is, again, goes back to my previous point. Making sure that you get the right mortgage, not the cheapest mortgage, because the cheapest mortgage in the wrong situation could cost you, again, when it comes time to sell your property. I've had clients that recently purchased a home that then ended up finding out they were pregnant, which means now they don't have enough space for their newborn to come home. So these are the types of things that you have to start thinking about a year or 2 or 3 in advance. How long maybe will my son or daughter be in this certain school district? Or do we want to move to somewhere else? Or maybe you might get a promotion. Or maybe you're looking to relocate to somewhere else across the country. Start thinking about these factors, because every time you either sell a house, refinance your house, it's going to cost you money, and it's not cheap. You want to make sure that you account for these decisions, because it could cost you thousands of dollars, and sometimes you may not have enough equity to do what you want to do, which means you're now stuck with a property, or you'd have to contemplate short selling the home if you don't want to be a landlord. And number 7, overspending. This goes back to creating a budget for yourself. When you're buying a house, I think it's a really good idea that you dive through your expenses. How many recurring monthly expenses do you have? And how much is that total? Is it a few $100 a month? Is it $1,000 a month? How many of those streaming services do you really need? Can you get rid of some of them to then maybe get a little more discipline for the next 6 months, a year, so that way you can buy a house? Are you guilty like me, where you're eating out every single day? Postmates, Uber Eats, DoorDash, whatever it is. I know it's convenient to utilize that, but is that really worth the money? Are you then creating more opportunity for yourself because you don't have to drive and cook and do all these other things to make more money? You have to look at the cost benefit of those types of situations, because spending another $20, $30 for every single meal, if you don't have the ability to create more upside for yourself, You might want to take the time, go to the grocery store yourself, cook those meals in advance so that way you can save hundreds, if not thousands of dollars on dining out every single week. And number 8, rushing the process. This is a big mistake I see so many renters make. You're not planning in advance. You know that your lease is up in 3 months and you literally wait until there's 30 days left and then you decide to talk to a lender or you talk to a real estate agent about buying a house. Now, in some cases, this works out. Maybe the stars align and you do find a home, you get qualified and everything works out. But so many buyers out there have little nuances to their file that have to be addressed that sometimes it doesn't take 30 days. Sometimes it could take 90 days, 6 months, even a year. Once you understand that buying a house is a goal of yours, you want to make contact with a lender or a real estate agent. You want to start having that conversation with them, building rapport, understanding if they have your interests involved or not. Because the industry has gotten so tough over the last year, a lot of real estate agents are getting out of the business. A lot of loan officers are getting out of the business. So are you working with someone that does this as a full-time job? Or did they go back to work and they still have their license and now they're trying to juggle a full-time job working 40 hours a week and trying to be your realtor at the same time? Those types of things usually never work out well. So you want to make sure that the person you're dealing with is a true professional. They do this for a living. They don't have any other side jobs just to make ends meet, because customer service is important and you're spending hundreds of thousands of dollars. I'm sure if you had to get surgery and you were spending hundreds of thousands of dollars, you'd want to make sure that that doctor or surgeon did that as a full-time profession and they weren't working at a restaurant or teaching or doing God knows what just to pay the bills and trying to be a doctor at the same time. Same thing with buying your house. I've heard horror story after horror story about clients using the wrong person that only to get burned, which has cost them money. So make sure that you're planning in advance, getting your budget together, and utilizing these 8 steps that I've just given you to help you stay away from sabotaging your dream of becoming a homeowner. If you're ready to start the process, you can always hit the description below. There's a link to a loan application, or you can schedule a call with myself and my team. We'd be happy to talk with you and customize a game plan to get you into homeownership. Share this with a friend. Thanks for watching, and don't forget to hit that subscribe button, and I'll see you on the next video.